Hi, and welcome to the Stock Scores Market Minutes for May 15th, 2017. This week's topic, watch for sector moves, then the market analysis, and finally, trade of the week on SBGL. All right, let's get into the topic of the week, watch for sector moves. I always like to watch for abnormal moves in individual stocks, but in addition to doing that, it's helpful to watch for abnormal moves in the overall sector. When these sectors break from low volatility price patterns, just like we look for in stocks, but in an industry group, it can often take most of the stocks in that sector along with it. Stocks all have some correlation to the overall market and their industry group. When the sector is moving strong, that correlation increases and tends to help all of the stocks in that group move up or down. In the past week, the retail sector was very weak, and it dragged every stock in the sector down, setting up a lot of good short selling opportunities, regardless of what the fundamentals were for the individual companies. And so the point is, when the sector is moving abnormally, it's probably going to take the stocks in that sector with it. All right, here's the S&P 500 30-day 60-minute chart, and you can see that we've been stuck in a sideways range here for more than the month of May into the end of April there. And that makes it a bit of a challenging environment to trade. There have been some good day trading opportunities because it is earnings season and you get stocks moving on their earnings news, but in general, the market's been pretty quiet. Moving over to the longer term chart, you can see that low volatility right there. But in the big picture, we are still in an upward sloping channel. We're probably more towards the bottom half of the channel, so the upside potential is there. What we want to watch for is that the upward trend line is not broken. This remains a bullish chart, but a bit of a sleepy one right now. On to the Russell 2000, which has been stuck in a sideways range since November, December last year, and really been a tough place to find trading opportunities because of that sideways pattern. It's not that things are particularly negative in terms of a downward trend. There's just no life in the small caps. And until we can break through this resistance with some enthusiasm or break the upward trend line with some enthusiasm, will we really get good trading opportunities either on the long side or the short side. On the Toronto Stock Exchange, a little bit of a downward bias, but in general over the last month we are sideways, and therefore it's a neutral chart. We have a bit of a pennant pattern forming there. Break to the upside, positive, break to the downside, negative. Watch for that in the near term. Longer term, we are threatening to break that long-term upward trend line. We're right at that upward trend line, and we could see, we haven't got a strong move yet, but if we get a strong price move down for the week, then I would be quite bearish on the Canadian market. If, however, we bounce off of that and break out through this resistance level, then the upward trend continues and we should move up towards the top of that price channel. So you have there what to watch for. Just keep an eye on the charts into next week. TSX Venture had a great rally there, then has gone sideways since then, sort of been bouncing around. A little bit of a falling top here, which is a negative. I think that there's a very real chance we head down to support. Of course, with the gold chart rolling over, we'll talk about that in a moment, that could drag this sector down because, of course, it is quite mining heavy. On the Treasury bond market, interesting that we had a little break of the downward trend on Friday, very short-term downward trend, albeit. Lots of resistance up here, but it does look like Treasuries want to move higher, which means interest rates moving lower, short-term only, but I think that's the bias for the next week or two. On the US dollar, we've got falling tops. You would think with the US Federal Reserve wanting to raise rates that we'd have strength in the US dollar, but the reality is the strength in Europe and other places in the world is making that money move over to those markets. And so it's not so much that the US dollar is bad, it is more a case of the rest of the world is getting better. And on the gold chart, well, there you have it, that break of the upward trend line, which was a relatively short-term one, happened 2 weeks ago. We should get follow through down to here. There is our downward trend line. we do have support at the upward trend line. So there's not considerable downside. I do think we can maybe come into here and then bounce up into there, and we'll be trading along in this pennant pattern for a little while. Not really a strong chart to be a buyer or a seller because volatility is diminishing. Here you got lots of volatility, and notice with each wave up and down, we're tightening in our volatility, which means we are getting into that pointy end of the pennant when there's not a lot of price action to trade off of. So be cautious with that on gold. On the US market, hey, we've been stuck in a tight range for a long time. We are right at the bottom of that range and really threatening to break down through support. We haven't done so yet, but if we do, if we go down any more, I would say if we have one more down week, then I think we'll test the lows of January 2016, well into February 2016. So I'd be cautious with oil, but it is at a point where it should bounce. It did bounce back a little bit on Thursday. We'll see if that gets some follow through. And finally, the fear chart. Fear is at a real low point. There's just total complacency in the market, very low volatility, and so that's what we're seeing. So let's summarize then. U.S. stocks bullish long-term, neutral short-term. Canadian, same thing, bullish and neutral. Gold bearish on both time frames. Oil neutral long-term as it's in that sideways range, but bearish short-term and could possibly break down through some support. We've got that low price volatility in stocks, which shows that investors are confident in the valuations that we have, but they're also looking for a catalyst to send them higher or really lower for that matter. The Canadian market is threatening its upward trend line. Want to be cautious there to see that that doesn't get broken. Gold likely to move lower in the near term, while oil has fallen into support where it should hold, but it's important to monitor that it does hold. And as I said, fear is low. All right, let's move on to the trade of the week. This is a day trade from Friday. One of the things I like to look for is stocks that show strength on the open with strong volume. But I don't want to buy them up here because the risk-reward trade-off is poor. I like to wait for the pullback and then a break of the pullback. Now, you can only do this on certain stocks. I teach you in the Active Trader program what stocks that works on. It doesn't work on every stock. I monitor maybe 15 or 20 each day where these things are setting up. But in this case, we had a nice setup there. That was a message candle, which is one of the indicators I provide to my students. And it rallied nicely, closing up 5-to-1 risk reward for the day. Nice little day trade on SBGL. Well, that's been the Stock Scores Market Minutes. Please subscribe to the channel. Like it if you like the video. And if you have any comments, I'm happy to answer those as well. Have a great week in the market and trade well.